Everybody, this is Jim at sp500chart.com. It's about 6:30 here on Sunday evening, the 21st of January 2024. We're going to take a look at what was an historic week in the S&P 500. And we'll talk about why that is after I remind you that the website and the video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'm not a licensed financial professional. I'm just the guy who draws lines on charts. So let's take a look. Okay, we are looking at a daily chart. Just to remind you, we had this big inverted head and shoulders pattern when we measured the depth of the pattern right here, and we kind of line that up for where it really broke out. That gives us our target up there at 5,028. Remember, just this past October we were down at 4119, and it was like, is that 5,028 even possible? Well, look at how much we've come from that low 4100s, and now we're up at 4839.81, and folks, that is a new all-time high for the S&P 500. Additionally, this little inverted head and shoulders pattern right here, I think that is probably, would not surprise me if that ends up being a flag flying at half-mast. If we start measuring it from this red line, we go up, we go sideways, and then we go up that much again. That takes us up to our target. I can't really predict based upon that half-mast flag idea. You can't. But we can predict 5,028, and I'm still going to call that 5,000 just because 5,000 might put up a mental barrier. And then, of course, from that last small inverted head and shoulders pattern, that target is almost exactly from where we are now to getting there. So it's funny how things work out like that sometimes. You get these things. That's why sometimes we snap a line in a wedge or in a triangle, because you end up with these pauses and little pullbacks, a little turbulence, if maybe that's the best word to use, right around that halfway spot. Why might that be? Well, think about it. If a lower level is where bears lose control and bulls gain control, and then the upper level is where bulls lose control and bears gain control, well, right in the middle is where they tend to be evenly matched. So I think that's why you get to that midway point. In other words, you bounce off support, and then you get to the point to where there's an even match, and there's a little standoff, maybe even a little retracement. Then when you get over that, you go up to the upper line of resistance. At that point, bulls have already done what they can do to get you up to resistance. Bears start to take control again, and as they bring it down, well, you get to that halfway point again, and that's where bulls and bears are again evenly matched. So you bounce around that a little bit. But anyway, there you have it. That is a new all-time high. And it really was a very strong Friday with the S&P up almost 59 points. If we look at things on a 30-minute chart, well, there you see that descending wedge that broke out on Thursday, back-tested, and then it was off to the races. We know that descending wedges tend to at least want to get things back to where they were before the wedge started to form, but that's just a minimum target. And in this case, obviously, there was more to it than that. So, guys, there really isn't much more to say. We can look at this little inverted head and shoulders pattern here, and we can see it in a little bit more detail. That, like I said, that's going to bring us up. It should. The target is about 49.20. And keep in mind, I'm going to leave this lower green support line where it is. It did break when we formed that descending wedge, but we don't ever have to get over that line ever again, and the markets can still absolutely be on fire while never reaching that line again from now until when the sun becomes a red giant, and with its diameter about the orbit about out to the orbit of Mars. In other words, never ever again do we have to get over that line. It's not even the least bit of concern, because again, that line is moving up at about 83% per year. So yeah, that's not a problem. If we do come up to it, I would expect it to be resistance. Again, predicated upon the idea that this line is in the right place. Still not totally sold, because there aren't a whole bunch of touches, and we've got some little areas that look like they're technically significant that don't have anything to do with that support line. But this is an interesting chart, isn't it? We come up to this level here, and then we form a descending wedge, come back up to it, form another descending wedge. This time it's a right shoulder in an inverted head and shoulders pattern. And you remember, we've talked about this before. It's not unusual to see the right shoulder form on a wedge. It is a little less likely that the head, the inverted head, will form on a descending wedge, but in this particular case, that's exactly what happened. So anyway, we'll see what happens this week. A pullback to the neckline certainly would be a very normal occurrence. And if you look at this chart of this big inverted head and shoulders here, we had a pretty deep pullback. It did not come all the way back to the neckline, but it came almost exactly to the breakout level. So, you know, you just kind of, after years of looking at these things, you just kind of say, well, you know, maybe we have a nice day Monday, and then Tuesday might just be bad. Let me think about it. Let's say we put on another percent tomorrow, and everybody's going, oh man, I got to get into this market. And then on Tuesday, we end up being down 2%. And doom and gloom, once again, creates another foothold in the wall of worry that bull markets love to climb up on. But if it does, not a problem. You know what to expect. Doesn't mean it's going to happen 100% of the time, but you know the odds favor any pullback to that neckline is going to likely be met with some support and then a resumed move upwards. So anyway, there you have it, guys. There is your weekly review for the week ending January 19th, 2024. I appreciate you taking time out of your day to watch this. And of course, thank you for your very kind support. Take care.